Charlie Munger, the late billionaire investor and right-hand man to Warren Buffett, had some famously blunt advice for anyone trying to build wealth. He said, "The first $100,000 is a bitch, but you gotta do it. Find a way to get your hands on $100,000. This initial phase is grueling because you are doing almost all of the heavy lifting. If you map out the journey to six figures, roughly 85% of that money comes directly from your personal labor and disciplined savings, leaving only a tiny 15% to investment returns. If you manage to save $10,000 every single year and invest it at a realistic 7% return, reaching that six-figure milestone will take you nearly 8 continuous years of flawless execution. Spending 8 years watching a portfolio slowly creep upward takes a severe psychological toll. It requires intense delayed gratification, resisting the urge to buy cars or lavish vacations while progress feels practically stagnant. Building this initial foundation is a test of human endurance. You aren't proving your ability to pick winning stocks. You are proving your ability to weather nearly a decade of financial friction. During this early grind, high-interest debt acts as the dark side of compound interest. Think of your savings as a small snowball you are trying to roll down a hill. Credit card balances and high-interest loans act like a hot sun beating directly down on it, actively melting your progress and counteracting the money you manage to pack on. Taking on a $300 monthly payment for a depreciating asset like a new car, or succumbing to lifestyle creep, mathematically lengthens your timeline. You simply do not have enough capital mass yet to offset those losses with investment growth. Until you build up to that $100,000 tipping point, every single dollar you spend unnecessarily is a permanent setback to reaching financial escape velocity. Once you cross into six-figure territory, the math flips in your favor due to a concept known as the scale of capital. Identical financial risks suddenly yield vastly different results. If you invest $100 and achieve a 10% return, your profit is $10. But apply that same 10% return to a $100,000 block, and you generate a $10,000 profit. This chart tracks the famous doubling penny analogy. If you double a single penny every day for 30 days, the first 20 days produce a flat horizontal line that barely clears $5,000. However, days 21 through 30 curve upward, passing $5 million. In the real-world timeline of building wealth, hitting your first $100,000 is the mathematical equivalent of reaching day 20. Because your money is now generating significant returns, the timeline required to hit your next milestones begins to collapse. That 7.8 years it took to get the first $100,000 shrinks to 5.1 years for the second. By the time you reach $1 million, the next $100,000 takes only 15 months. At this threshold, the mechanics of your growth transition. You no longer provide the vast majority of the momentum. Your capital finally has the mass to start moving itself. To cross this threshold faster, you have to play aggressive financial offense. Playing offense means actively increasing your daily income. Since there is a hard limit to how many expenses you can cut, you have to focus on building high-income skills, securing freelance work, or launching a side hustle to generate fresh capital. Once you generate that new income, you must protect it using tax efficiency. Keeping more of what you earn is a crucial defensive mechanism to accelerate your timeline. For example, entrepreneurs and side hustlers are taxed on their profits, not their gross income. If you start a video production company, you can legally deduct the cost of justifiable business expenses, like a new smartphone or camera, from your earnings, effectively acquiring those physical assets tax-free. You also need to maximize the efficiency of every dollar you save by using tax-sheltered accounts, like a Roth IRA. A Roth IRA is a specific retirement account where your investments grow entirely tax-free. Pair this with a high-yield savings account, a bank account that pays significantly higher interest rates than traditional banks, to ensure your cash is always multiplying. Maximizing your incoming cash flow while minimizing the drag of taxes and inflation is the mathematical blueprint to accelerate through that first phase of wealth. Beyond the raw math, reaching six figures changes your psychological relationship with work. Holding $100,000 in capital provides a specific kind of security that lower amounts simply cannot offer. You finally have the leverage to take asymmetrical risks. If a high-upside, commission-only dream job opens up, you have the financial runway to take that swing without risking your livelihood. That capital allows you to walk away from a toxic work environment without an immediate replacement, or weather a job loss for over a year without depleting your lifestyle. The financial system isn't designed to exclude you. It simply requires a significant upfront entry fee of self-funded capital before it begins to do the work for you. If you are currently feeling the friction and stagnation of the early grind, recognize that it is not a sign of failure. You are simply grinding through the early days of an exponential curve. The hardest day of your financial journey is mathematically behind you the moment you cross 6 figures. To speed up your timeline and get there faster, click the video on screen to learn the highest paying skills you can start building today.